Good morning. You're watching live Daily Markets Outlook from the brokers for Wednesday, 4th of December 2013. Most of currency pairs are still in the choppy mode of their highs and or lows ahead of Friday's U.S. non-farm payroll data that most of investors are awaiting, and basically some profit taking was seen in past couple of sessions. As euro against dollar remains capped at 136, several attempts higher did not succeed, but on the other side, the downside remains protected so far above 135.100. That keeps the price action in the near term entrenched within the certain range. Similar pictures with the sterling that is in the 163.40, 164.40 range. Again, investors are waiting some more information from about U.S. jobs. Dollar remains steady against Japanese yen following a pullback from a fresh high at 103.36, but slight pressure is seen in the near-term technicals, despite the price being supported at 102 level, where the support was found, as some comments are saying renewed shorts, suggesting renewed shorts somewhere around 103 psychological barrier. I don't think that we might see some more significant action ahead of Friday. Of course, some instruments were quite active. Top losers of the Asian session were Aussie dollar and gold. Aussie dollar got pressured and hits 3-month low after Australian GDP disappointed, pushing the Aussie against US dollar close to the psychological 90 level. Yellow metal also came under increased pressure after cracking the near-term consolidation floor at 12.15 and approaching a psychological 12.00 support. We have interim level at 12.07. A quick look at today's calendar before we go to the more detailed outlook. Services PMI data and the GDP data are highlights for today. As said, Australian GDP for third quarter disappointed, came at 0.6% compared to 0.7% in the second quarter. That was also the forecast for today. Spanish services PMI for November came at 51.5, beating the forecast of 50.7 and well above October's release at 49.6. Still to come, Italian services PMI November at 8.45, GMT 51.2, forecast 50.5 previous release. Eurozone 1 comes at 9 o'clock. No changes according to the forecast of 50.9. That is identical to the previous release of month of October. Half an hour later, 9:30 GMT, UK service PMI for November 62.1 is forecast, below the October's release at 62.5. Retail sales from Eurozone due at 10 o'clock. GMT October release is showing a 0.2% increase compared to a pullback of minus 0.6% seen in month of September. Third quarter revised GDP for Eurozone is expected again to stay unchanged at 0.1%. From across the ocean, non-farm employment change for November, one of the indicators for the US NFP data, due at 13:15 GMT, 172,000 new jobs is forecasted in November compared to 130,000 seen in month of October. US trade balance for October due at 13:30 GMT, and slight narrowing of the trading gap to 40.3 billion US dollars according to the forecast, compared to the gap of month of September of 41.8 billion US dollars. Canadian trade balance for October due at the same time, widening the gap to 700 million, I do apologize, Canadian dollars, compared to the gap of month of September of 400 million Canadian dollars. Canadian Bank of Canada is due to release their interest rate decision at 1500 GMT. No changes according to the overnight rate. For the overnight rate, according to the forecast of 1%, that is unchanged from the previous meeting, with the rate statement to follow after the release of data. At the same time, new home sales from United States for October, 432,000 is the forecast. ISM non-manufacturing PMI for November forecasted identical to the October's release, 55.4, and half an hour later at 15:30 GMT, crude oil inventories for November are forecasted to show draw of 500 million barrels. First in the past couple of weeks, compared to the previous weeks, a build of 3 million barrels. That basically pushed the price significantly higher of the crude oil. We're going to take a look on this. This is quite interesting in our technical part, and President Obama is going to have a speech at 16:20 GMT, and these will be the highlights of today's economic indicators. Most of them are in red, so keep an eye on the markets, as this is quite important. I think from technical point of view, euro remains capped under psychological 136 barrier following brief attempts above this level. Both unsuccessful, one at 136.20 and the other one at 136.14 yesterday, with the subsequent pullback from previous high at 136.20 being contained at 135.23 by trendline support. Look at the lecture, even more clear. Still positive tone, still prevails. This action number positive mode, slightly weaker for our structure at the moment. Negative to neutral, I would say, while our indicators are still holding a positive falling bounce of fresh low seen overnight at 135.66. Subsequent bounce higher now approaches 136 barrier, our initial resistance so far reached 135.90. That keeps again a more focus towards the upside, but overall picture is still showing sideways movements and no clear direction, with the downside being protected at 135.20, 135, and the upside 136, 136.20. As said, investors are awaiting U.S. jobs data in order to make their final decision. Overall picture for euro is still positive. If we take a look at the larger daily chart, as indicators now broke up there, a midline and a larger uptrend that commenced from 132.94, low of 7th of November. It has the price retraced almost 61.8% of a fall from 138.31 down to 132.94, with the current sideways movement seen as a consolidation, as long as the price holds above the main trend line that is slightly below 135 support. 135 is a quite important level, as this is seen as a breakpoint of losing this support, and euro may trigger a strong, more significant pullback. 134 the 523 is set is in 11 comes 25, that is approximately 38.2% retracement of entire rally from 132.94 to 136.20, and this is also daily 20 days moving average at this zone, and we have a daily Tenkan-sen line that is around 135. That gives reinforces 135 support, and any violation of this level could be a good signal for some more significant pullback. Otherwise, upside remains in focus, and penetration through 136.20 is expected to resume the near-term rally of 132.94, and the focus next barriers. We have a daily cloud top at 136.49. Our targets on the upside, 137.10 is previous peak of euro dollar from January, from 1st of February 2013, and this is seen as our near-term upside target. Of course, once 136.20 barriers are cleared. So we have two levels to watch: 135.20, 135, and 136.20. A break of either side to signal fresh direction. More focus is still seen towards the upside, according to the still positively aligned near-term technicals. However, the downside will remain vulnerable as long as the price holds below 136. A break of which is again to shift focus up towards yesterday's peak, 136.12, and the previous one at 136.20, posted on 29th of November 2013. And the British pound against US dollar is showing a similar picture. Like euro dollar, consolidation is seen under a fresh high at 164.41, posted 2 days ago, with downside so far being protected at 163.40, where the pullback was contained by ascending 20 days moving average of the 4-hour chart that is currently under attack. The bounce from 163.40 reached 164.35, where the rally was capped, and the subsequent easing lower below 164 now sees a risk of possible retest of the range floor at 163.40. This is seen as our initial support and the sort of break point. As just below this, we have also 38.2% Fibonacci retreat level. We're talking about up leg from 161.37 to 641. Loss of these levels is too weak and immediate structure, and also could be a signal of a double top formation on the chart as a break below 163.40, 163.25 is initial signal. Now further extension lower below 163 psychological support that is close to 50% retracement will be seen as a confirmation of possible further easing. Now on the hourly chart, indicators are entering negative territory that keeps the downside under pressure, with the notion being supported also by descending indicators on the 4-hour chart, as all indicators are now south moving and pointing lower. Further pressure will be seen, as I said, on a break below initial supports 163.40 and 163, so that marks psychological support and the 23.6% retake of larger uplift from 158.53 to 164.41. So far, sideways movements. Initial support at 163.40, the initial barrier at 164.40. Break of either side to define the near-term direction. As said, near-term structure is still slightly negatively aligned, and sees more risk towards the downside at the moment, while a positive tone prevails on the daily chart. However, RSI is close to the overbought territory that could signal another further hesitation and a possible extended sideways movements, consolidative action, as long as the price holds above 163 support. Dollar yen is our next currency pair in the corrective mode of a fresh high at 103.36, with dips being contained at around the 102 level. So far being contained by 55 days moving upward to its bounce higher so far, reaching 102.76. Still a weak tone on the hourly chart, keeps downside that risk, while on the 4-hour chart indicators also pointing lower. That sees potential for further consolidation while the holds above 102 before bulls reassert and resume rally, as daily structure remains positive. Again, overbought conditions suggest that possible reversal could be a likely near-term scenario, as the price rallied strongly from 2013 low at 96.55 to 103.36 so far. Retracing, extending gains over 161.8% Fibonacci expansion of the down leg from 100.60 down to 96.55. As said, more downside risk is still seen for possible stronger corrective action, as long as the price holds below initial 103 barrier, break of which is required to shift focus again towards 103.36 and resume gains towards our target at 103.72, which marks the annual peak of dollar yen posted in on 22nd of May 2013, and the price is just ahead of this level following the completion of the bullish pennant pattern on the strong rally above the trendline resistance that now approaches this key barrier, with the ADX studies on the larger time frames being firmly bullish and seeing potential for eventual push towards 103.72, our short-term target. On the other side, the Aussie dollar remains under heavy pressure, with disappointing data being released from Australia, putting the pair under increased pressure. Yesterday's recovery rally was capped at 91.45 late last night, and the subsequent two-legged quick reversal that also broke below initial support and the near-term base at around 90.50 zone. Extended losses so far to 90.15, approaching key support 90 psychological support. As the price remains in the steep in the descent in the downtrend from 97.55, 23rd of October. Peak 90.00 is seen as the last significant level en route towards our targets and the key supports. Annual lows at 88.91 and 88.46. The one is posted in August 2013, and the other one at also in August, pardon, where the double bottom was formed. Now pressure seen, increased pressure seen towards the downside. Once 90.00 will be taken out, the way will be open towards these supports. On the lower time frames, overextended conditions suggest that the session on approach to psychological and support cannot be ruled out. We have already our listing also before indicators are approaching these levels that sees risk of a possible further extension lower. However, we have also the bullish divergence seen on the RSI and the MACD of the 4-hour chart that suggests bounce higher for the price, penetrates 90.00 support. In case of this scenario becomes valid, then we can more significant corrective action. However, regain of important barriers. Yesterday's peak at 91.45 and 2 days ago one at 91.67 is seen as a minimum requirement. The first one is also reinforced by falling 4-hour to a 55 days moving average. Break of these levels is required to confirm such a scenario of reversal and avert immediate downside risk in favor of some more significant corrective action. So far, pressure is more seen, still seen more towards the downside, and as said, unless the price clearly breaks above 91.67, and more significant is 92.00, risk towards 90.00 and the 88.91, 88.46 key supports in extension will be seen as a likely near-term scenario for Aussie dollar, US dollar. And finally, from the crude oil performance came again under pressure. Brief condition was seen yesterday above 12.15, fresh low with the gains being capped at 12.26. That marks a previous low, and the fresh extension lower to 12.12 so far sees increased pressure towards the downside as the price is towards psychological support at 12.0. Interim support, as we said, is at 12.08, 5th of July low, and then we have 12.00 and our key support annual low of yellow metal at 11.80 posted on 28th of June 2013. Pressure is still seen towards the downside as the third wave that commenced from 1361 could extend exactly to 1180. That marks its Fibonacci 100% expansion at 1179. So bears remain favored at this point. If we take a look at the ADX studies on the daily chart, then bears are still firmly in play. On the lower time frames, overextended conditions of both 4-hour chart indicators suggest that possible hesitation ahead of 1200 support could precede a fresh weakness in favor of some consolidative corrective action as negative tone prevails on lower time frames and still sees more risk towards the downside. Initial resistance is now under pressure, 12.15 previous range floor, and then we have more significant 12.26 range top reinforced by descending 55 days moving average and just ahead of 38.2% Fibonacci retracement of the entire fall from 12.54, ahead of also a previous low at 12.34 that marks 50% retracement, and any stronger bounce should be ideally contained somewhere at around this zone in order to keep the negative structure in play for eventual push through 12.00 towards 11.80, our key support annual low, and also Fibonacci 100% expansion. And finally, another one that is interesting is crude oil. As a strong rally yesterday seen initially on profit taking. We can see it, I think, the best on the daily. On profit taking and also boosted by expectations of first time in a couple of weeks draw in the US oil inventories, pushed the investors into the crude oil after they were short following the break below the multi-week consolidation floor that was around 93.20. The price extended down to 91.76, and then subsequent bounce seen on profit taking as well as triggering stops extended again so far to 97.44. If we take a look at the daily chart, then we can see that the price is approaching 200 days moving average that is currently at 98.54 after clearing initial barriers that was around 95.60 previous range floor, and then 96.59, 23.6% Fibonacci extension, Fibonacci retracement, pardon, of the entire fall from 112.21 down to 91.76. We have also that cross at this point, 55 days moving average below 200 days one, and also the previous that cross of 20 to 200 days moving average approximately at the same level. That reinforces this quite strong barrier that is currently standing at around 98.50. Any extension above this level is set to signal more significant corrective action and confirm temporary near-term base at 91.70 zone for extension towards next barrier at 99.57, 38.2% Fibonacci retracement. Back to the lower time frames, extremely overextended conditions on the hourly chart as well as a 4-hour chart suggests that some corrective action should occur in the near term, as we can see that all indicators are still heading higher despite being in the extremely overextended conditions, yet no signal of reversal seen on both lower time frames. That still sees a potential for further extension higher. As that important target is 200 days moving average at and if we were to double that cross 220 over 255 moving average over 200 moving average, strong barrier. Any penetration above this level is expected to signal a stronger recovery action on the downside. The pullback from current highs that is not yet seen should face good support at 95.50-60 previous range floor, now acting as good support, and should be ideally contained somewhere around this zone in order to maintain the freshly stables of 91. So if we take Fibonacci's off until now, as the price didn't stop yet, this is somewhere around 38.2%, seen as an ideal reversal point in case of stronger pullback. This will be all for today. Do we have any questions? And now it's time for questions and answers, so please, if there is anything, you can submit it right now. It seems that we don't have questions for today. I would like to welcome some new names that I see today. Hope that you will find our content useful. Of course, you can also send your comments and suggestions to the email shown on your screen. And also, if you missed any part of the current today's session, you can find it recorded in YouTube. Our page is called Windsor Brokers Forex. Thank you again for being with us. Expect to see you again tomorrow morning. Until then, I wish you a nice Wednesday and profitable and successful trading. Good luck.